He did it. He really did it, Elon, you rascal. Look at him smiling. He's doing the $2 billion share offering that I was talking about in the last video. Now, I didn't know it was going to be $2 billion, but it's still a secondary offering, right? And you know what that means. He definitely saw our last video, took the advice, and now went and did this. That's the power of our fallible community. Great work, guys. And I'm really happy about this because this is the right move for Tesla in my professional YouTuber opinion. So let's break it down what exactly is happening in this video. But first, if you want to automate the process of finding explosive stocks like Tesla, then definitely check out our explosive stock scanner blueprint. It's going to teach you how to do it. Link down below in the description and comments where you could learn more. But yes, Tesla, $2 billion offering in a secondary offering. So remember, we talked about this in the last video. A secondary offering is just offering more shares to the market. An IPO is like your primary offering. So it's like another IPO kind of where you're just putting more shares onto the market and raising more money. So they're going to issue $2 billion worth of common stock. And actually their underwriters have an option to purchase additional securities. So it could actually be about $2.3 billion in proceeds. And again, the way this works is that Tesla does this share offering first to like the banks, just like in an IPO, right? And they'll do their thing where they find the people to buy the shares, and that's the primary selling. It's like the first market. By the time we see the shares on the exchange, it's already the secondary market. So we're not like buying directly from Elon. We're buying from the other people who directly bought from Tesla and Elon. So Tesla definitely needs this money because the company is forecasting as much as $3.5 billion in capital expenditures this year because Elon is doing a bunch of stuff, bringing new models to market, ramping up its first overseas assembly plant, and building a new one. So it's interesting because if you look at their spending the last 2 years, they've actually decreased it a lot. They were hampering down and trying to get profitable, which clearly made investors happy because of the way this thing ran. So that decrease seems to have worked. But Elon has some expensive plans for the coming years. So you guys know he made his Shanghai Gigafactory, right, in January 2019. Well, now the next one is going to be near Berlin, and he wants production to begin next year. And he's also sped up the introduction of his latest car, the Model Y, to this quarter because, you know, he wants to complete that sexy word, Model S, 3, X, and Y. So Tesla's going to use the proceeds from this offering to strengthen its balance sheet and for general corporate purposes. That is descriptive. So in 2020, they're actually expecting a 164% increase in their spending. And in 2019, they spent a lot less than they planned for, 1.3 billion instead of 2.5, which is shocking, right? Most companies are overspending. But like I said, looks like the right move. So 2 weeks ago, Elon said that they actually wouldn't be raising any new capital. He said the company was spending sensibly and not holding back on expenditures in ways that would limit progress. So he said, in light of what we're doing, it doesn't make any sense to raise money because we expect to generate cash despite this growth level. Now that's great if you think your company doesn't even need to raise money and can just keep going. But remember what we said in the last video, the time to raise money is not when you need it, but when you can. And also based off that quote from 2 weeks ago, I can probably imagine that Elon was just playing the game a little bit, because the last thing you would want in the middle of your stock price shooting higher is for you to say something to bring it back down. So by saying that he's not planning to raise more money, even though he most likely secretly was, you know, that's going to keep the bulls happy, because as soon as you say you're going to offer more shares, what's going to happen? You're going to dilute the number of shares on the market and the price will come down normally. And we'll talk about that in a second, but it was in Elon's best interest not to mess with anything, because as this stock price kept going up, that's more and more money that he could raise when he finally does the offering. So it's probably smart that he said he wasn't going to raise any more. Now, overall, I think this is a super bullish move for Tesla, and it's really smart. You're going to get the capital you need, and when times get rough, you're going to be able to weather it a little better. And also, this is what you're supposed to do with your stock price as a company. You got to use it to benefit you. So a higher stock price, as healthy stock, is great for a company. Your loan rates become lower, you can raise money easier, and that's not only because of just the actual price of your stock and what that goes into the calculations, and you can get a lower loan rate or whatever. It's also because people are just more confident in your company and they're more willing to lend and willing to help, and there's just good sentiment behind you. And this is the perfect time to issue those shares because of how much Tesla grew in just the last month or so, few months. It's long-term thinking to have that cash and pull it out now. Short-term thinking would be to not raise any money right here, and that tends to happen in companies that are older, that only are concerned about their share price because all their executives have options, so they want to keep their price as high as possible. So if Elon was just trying to be rich, then he wouldn't tamper with the stock price like that and possibly cause it to go lower. But he doesn't care about pumping up the stock price. He cares about the long-term success of his project and the world. So again, to me, it seems like a really smart move, bullish for the company long-term. But of course, the question is, what happens to this stock in the short term? Now, I'm recording this early Thursday morning, like right after the news came out. And it looks like so far there's been a pretty positive reaction to it. Stock price is actually up on this news. And like I said, normally normally if a company is issuing new shares, the stock price will go down because it's supply and demand, right? More supply, same amount of demand, prices will lower because there's more supply than demand. But in rare cases, a company can issue shares and the stock price will go up. And that actually might be happening right here. So I keep bringing up Tesla in like almost every video because it's just interesting. And there's a lot of good examples from this. But what I was talking about in the last video is the price action that you could see happening with Tesla, this little triangle. And I was talking about how it's consolidating and we could really see it either break to the upside or the downside. And you don't really know which. But if I was betting now, based off the positive reaction to this news, I would guess it might just break to the upside, which is crazy, right? After this huge run. But if sentiment is that strong, then yeah, it can keep going. There's nothing stopping it. And what I mentioned in the last video too is that this coiling just shows how many strong hands there are. Because anyone trying to sell, as you can see right here, people are buying it up. And it's getting tighter and tighter, this little spread between the buying and selling. So that's kind of the supply demand story you can read from the chart. And the fact that this could have been taken as negative news, right? And the stock could have dropped a lot. Well, if it does the exact opposite, that's showing real strength in the stock once again. Strong hands, people holding, people even buying still. Now, if it does drop, I don't really mind because I've sold a lot of my position on the way up, as I always say. But for the last 25% of my position, I would not mind this breaking out to the upside again. And again, like I mentioned in the last video, if I was discretionary, I would be waiting for the breakout to happen either one way or the other before I was putting on a position. Because even though it seems like a positive reaction to the news, I mean, it's the morning on Thursday. Things could turn around today. And I also like to look at Friday closes because the end of the week is giving you a better signal. And I think the shares go live on the market Friday. Yeah, it says expecting trading date for these shares to be Friday. Now, normally you're going to get the price move on the news, not when the actual action happens. Either way, I would wait and see. But what you do depends on your strategy. I just definitely love what I'm seeing here. And I'm so glad that Elon keeps stomping on these haters because I am biased and a big fan. And speaking of strategies, definitely check out our explosive stock scanner blueprint because it teaches you what factors to use to find the stocks, and then it also automates the whole thing for you. So you can find really lucrative stocks instantly. And then you'll know how to build scanners too, so you could find any types of stocks that you want. Dividend stocks or large caps, maybe. Explosive stocks are more small cap companies, but you'll see. Check out the blueprint for sure. Link down below in the description and comments. Click that link and you'll go to a page where I'll explain more all about it. Now, if you like this video, smash like. Also make sure to comment down below with your opinion on what's going to happen with Tesla, because it's all speculation, right? Would love to hear what you think. And of course, subscribe to this channel and then hit that notification bell so you get an email notification of all our new videos. So do all that, subscribe, and I will see you in the next video. Stay fallible out there. Bye.